Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, 15th of April, starting the week after all the weekend. Oof, with the war, with Israel, with Iran, with all the uncertainty, and after a Friday full of blood, full of red. I mean, if you didn't check out my weekly recap video on Saturday, I really encourage you to do so because I gather all the information and I explain you why this is a really bad time to be on any position on any market, because we need time to really for the dust to settle. So after all the weekend in which we are everyone is watching Iran and Israel, and nobody knows what exactly is going to happen after Iran attack Israel, and doesn't know what it wants to do. The markets are still moving, and we have to really be aware of the situation. And one of the most important things that market don't like is uncertainty. So we are going to try to explain today's move in terms of the fundamentals on the economic data like we have here. But the most important thing that you have to take into consideration is that in these uncertain moments, the market is pretty damn bad. So the first thing that I would like to cover is retail sales on the economic side, higher than the consensus, and year over year is also higher than the consensus. Business inventories are still increasing, and retail inventories are also increasing. So the economy is in good shape. But remember what I told you, right? CPI was bad, PPI was a little bit decent, but not super, super decent. So we can basically forget about the CPI and inflation. So basically, everything was depending on Friday, and the war and the Middle East uncertainty is going to exacerbate this situation. So something I would like to check in this situation is after a big red day like Saturday, like Fridays, what the open interest did in those days. This is the ES, the S&P futures open interest. In a down day, it increased 15,000. That means that most probably all the people that got short were all the people that got open interest on Friday was shorts. So the S&P increased shorts position most probably, and that's why you have to be really careful after a weekend, because maybe we start the week on Monday today with that kind of sentiment going lower. At the same time, on the Nasdaq, it's the other way around. The Nasdaq didn't increase but decrease. So basically, all the people that were long were liquidated. All these guys that were pushed down, they basically liquidated their longs. So it's two different situations in which the S&Ps are really pushing the market lower, and the Nasdaq is basically all the people going higher being liquidated. So we have all the zone lower for all the people on the Nasdaq that got liquidated, the S&P really going lower. What did we do during the overnight is the most important thing that we have to take into account. And that's why I was watching this overnight today. During the overnight and during my weekly recap video, I told you a couple of levels that I would be watching. The first one is basically the golden pocket from Friday's move. So from high to lows, the golden pocket is basically here, and it converges with these fair value gaps on the 15-minute. Let me just show you. And on the 1 hour. So we have 1 hour, 4 hour, we have a lot of fair value gaps inverse on this move to the downside. But at the same time, look at this Nasdaq and look at the S&P basically during the overnight just going higher, 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 higher. Retail sales taking liquidity, and then right before the open, let me just put it right here, right before the open at this zone in the S&Ps, and right before the open at this same zone in the Nasdaq, taking liquidity, inverse fair value gap, pretty near of really cheap trade of the golden pocket. We basically look at this notation. When I saw these kind of things, we are building liquidity everywhere. All these were weak hands longs. So whenever the market opened, I really was watching to really an adjustment of this overnight inventory of full of longs to the short side to really cover at the base of everything that is this liquidity. And that's what I did. The opportunity presented itself. We just dumped. I waited. Market structure change, bounce. I was hesitating here because this was not super typical. I would like to do this to really take the risk off the table. But I waited for the second one. And on the second one, after breaking this candle, at this point, I enter here, stop at these highs. So basically, as you can see here, this is the setup. Stop here, entry here at this candle. We bounce again, and then we immediately basically destroyed all the people that were trying to push this market higher. 28 points of risk. It's certainly more than I would like, but the risk reward ratio 4.1 for a 170 points. Look at all these beautiful close candles. Look at this flash. All these people were just demolished. And I covered down here with only one contract, 2,000 bucks. And that's the way I really like to start the week, thinking about what happened during the weekend, thinking about what the open interest showed me. We analyzed the overnight situation, and this usually happens a lot when the overnight weak hands, longs or shorts, are super extended. The market usually corrects itself after the open, and then we see what happens. And now that we see what happened, we can see that the market is really weak. This uncertainty is really pushing the market. And look at this beautiful, flash, 50% retracement, and then continuation lower through the pivot. It's sometimes it's this clear. So we have to really pay attention to what is happening, because we are basically taking liquidity, taking pre-market lows, breaking yesterday's lows with a nice structure of rejection here, and then flashing lower. This flash is what is accelerating everything. And we are now starting to think about way lower levels. So let me first, I think the weekly is already adjusted. Yeah, the weekly is already adjusted. So we are at the edge of a big correction. As you can see today, we are from where we were up here in pre-market highs to right now, it's 1.81. We are accelerating to the downside. Look at all these Nasdaq stocks deep in the red, taking liquidity after liquidity after liquidity. This market is just pushing lower and pushing lower. The dollar, it's obviously quite strong. It's correlated inversely with the equities and the stock market. So strong dollar means more weakness to come. The Russell is really suffering, also minus 1.16. All the yields, all the interest rate futures are pushing higher. So we have the inflation pushing higher, the mentality of higher for longer is still there, the uncertainty of the war, weakness everywhere in every single stock of the Nasdaq. Everything is deep in the red. The only thing that are today it's positive is Goldman Sachs, really in the green, and Charles Schwab, two banks that are reporting earnings quite good. Okay, but if you are not playing those stocks, if you are playing equities or things like that, I mean, things are quite clear. The bigs still pushing. On the weekly recap, I told you that these are big, huge increase in volatility. And at the same time, treasury is going lower, higher yields, uncertainty of the war. I mean, at any point in time, Israel can attack Iran or do something crazy, and the markets will just explode to the downside. So, what can we do? Well, now that we know that today it's, if we missed this move, I just took part of that. I am super happy, but look at this. This is looking super bearish. I'm not touching anything above 18,000. I told you on the weekly recap that was one of my main targets. 18,000 is going to be huge because on the S&Ps we are just entering this fair value gap on the daily. We have a lot of liquidity down here, so we have these two pools of liquidity inside the fair value gap. And I told you on the weekly recap, I encourage you to check that video out. Lower high, lower high, lower high, lower high, finally blowing this and a big sell-off. And the Nasdaq is, it's more in a range, but it's approaching with this cascade of red, with this rag pull. It's really, it really has a lot of way down below 18,000. Right now it's at 18,017. So we might see some kind of relief here. But if we start doing these kind of things, I mean, for the rest of the week, we are looking pretty weak. So, I mean, don't try to catch the knife. Wait for all the news to really settle down. We need time to digest what is happening around the world, to digest what is happening with inflation, with other markets. I mean, dollar is super strong, yields, interest rate futures going higher. Crude oil is just trying to push due to the Middle East conflict. Gold and the defensive commodities are pushing higher. This is a pretty clear day of just big correction. So where can we really start tackling something? I would say I would watch towards down here below 18,000. I wouldn't touch in here in 18,000 because I think there's still potential to here, but around down here, I think in the fair value gap, it's clear. It's clear that we might find some support down here on the Nasdaq. I don't know if we are going to get here, but I prefer to really continue selling off and then see where the S&P is gonna stop. The S&P has support at 51.25. After taking this liquidity, perhaps we do things like this, some kind of structure down here. So we have to check both Nasdaq and ES to see how much of a correction both are getting. And then perhaps waiting for tomorrow, for Wednesday, for further news. There's not a lot of news this week, but again, from a technical standpoint, we really need to see these levels taken out and the momentum stopping, because this cascade of just red is non-stopping. It's non-stopping. Look at this. Nasdaq continues pushing lower. So trust me, be patient, be disciplined. Don't ruin your day trying to catch the bottom. We need more structure or even more days. So it's as simple as that. Wait for the close today. That's my best advice. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. This is looking pretty bad, so be patient, be disciplined, relax, sit tight, and watch the price action to really see where the structure is forming towards perhaps tomorrow or after tomorrow. So stay safe, everyone, and see you tomorrow.